Hello, everyone. My name is Matthew Frailey. I'm the founder of BreakpointTrades.com. Since 2003, we've been bringing advanced technical analysis, market commentary, trade ideas, and advanced trading systems, such as our 21 SPY and ES mean reversion systems, like you see here, our amazing KISS trend following systems. Nothing out there like it, and I'm soon going to be bringing high performance versions of those, which I'll do a video for you. But pretty amazing stuff, guys. Nothing like it exists. Really excited about it. Plan to work on that during this holiday week. Anyway, let's go ahead and get started with this weekend video. So, again, first off, I hope everyone has had a nice weekend. It's Sunday afternoon here, and this is the weekend newsletter before Thanksgiving week 2023. This is our back-end recorder for our standard web page newsletter. If you're just viewing us on YouTube, you should consider subscribing to us. You get a lot of benefits from our standard newsletter. We give you the live chart URLs instead of just static images that see here on the YouTube videos. Plus, 5 newsletters a week, actionable trade ideas, alerts to systems, etc. Anyway, let me go ahead and get this recorder started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. First off, I hope everyone has had a nice weekend. It's Sunday afternoon, about 6 p.m. Market futures just opened. ES futures are up, looks like a few points. But anyway, again, this is the comprehensive weekend newsletter, and it's November 19th, 2023. As you know, this will be a shortened holiday week for the U.S. markets in observance of Thanksgiving. U.S. markets will be closed on Thursday, half day on Friday. Really, we basically got about 3 days this week. During this week, I plan to do some trading, but I also plan to do a lot of, back end stuff for the website. I really want to get these high performance KISS systems finished. So I think we'll get a lot of that done this week, and I'm hoping to launch those soon. I'm going to discuss those a little bit below. Once I have them done, though, I'll be doing separate videos. I may even do a webinar, bring you guys on so that we can look at things in real time, answer questions. But again, pretty amazing stuff here. I'm really excited. Now, as far as the market, as you know, it's been one heck of a 3-week rally, hasn't it? The market of course, had the typical seasonal weakness from late July through late October. And since then, since those lows, it's put in an almost V-type rally with only one down day and 6 gaps. 6 gaps in 3 weeks on the index is insane. Again, during this time, during the first week, we had a confirmed breadth thrust indicator, which I'll discuss. We have 6 gaps in a row, or 6 gaps in the cash market. Just insane. Again, clearly seasonality is playing out, and really there's a lot of factors here. Number one, seasonality. Number two, at the lows, bearishness was extremely high, along with oversold technical readings in the market. Basically, the analogy I like to use is the kindling was there. You had a bunch of dried wood, straw. All it needed was a match to ignite it, and that's what we got. All that combination. Government economic data, which has been showing that inflation has been coming down, clearly helped the market rally. And furthermore, the 10-year appears to at least put in a pretty decent top. Again, guys, I will say the economic government data coming out of the government, there is some fudging going on there. We all know it, especially with some of those stats that came out last week on the CPI. It showed that healthcare cost went down 34%. How is that possible? Let me ask you, did your healthcare premiums go down at all? Did they go down even 1%? I don't know what the heck they're looking at, but it doesn't matter. The trend is up right now. The Bulls clearly have the football, and until they fumble it, it is what it is. All right. Again, short term, the market's a little overbought here. Could definitely use a pullback to consolidate gains. That said, we are in this holiday week. Most of the time, Thanksgiving week closes up. Again, that doesn't mean we go up every day, but it's possible that we won't see some sort of deeper pullback until after the Thanksgiving weekend. Usually, seasonality-wise, if you want to talk about it, the first 1 or 2 weeks in December are weak, so maybe we'll see that. All right. Again, the KISS systems have done an amazing job. They all went long on the indexes on a lot of these big cap stocks 2 to 3 weeks ago. For the S&P and Qs, just 2 days off the lows. So they've caught most of this uptrend. They avoided a lot of the downtrend drawdown, and they have stops, smart trailing stops to protect there. Now, as far as the market, the thing that does concern me a little bit here in the short term is the 2 hour VIX. I see a very obvious falling wedge with MACD divergence forming. But again, that could still flesh out for a couple days, where we don't see a bigger pullback till after Thanksgiving. So we'll see, guys, and let's go ahead and get started with things here. So first off, let's talk about some administration comments here. Let's talk about these custom high performance systems. I'm not showing any examples here, but here are some of the stats. So in all these stats, I have them versus typical buy and hold where, your A.G. Edwards type financial advisor, that's all he would do. Or 99% of financial advisors. Most financial advisors do not time the market. In fact, they tell you it's impossible, which I obviously disagree with. These systems time the market extremely well. So here's the Qs, 78-minute. Again, I have a daily version and I have a half-day version. I'll probably put them both out. But the 78-minute makes a bit more money. It's a little more dynamic. Still not that dynamic, only about 6 trades a year on average, right? Obviously, there's more in some years, like last year there was 14, but that's not a lot, guys. If you can't do 6 trades in a year, then you need to re-examine your life. I don't care how busy you are, busy doctor, lawyer, you can do that, okay? These aren't day trade systems. But anyway, buy and hold, and I have the drawdowns from the highs. That's typically how max drawdowns are calculated, and I did it from the January 1st open, since on the buy and hold you're just holding, you're not ever exiting. But you can see the difference here on the Qs. KISS custom high performance KISS system, average gain about almost 24% a year versus 16, so better. And some of the years are quite a bit better. But really, what stands out is the drawdown. Okay, typical average drawdown 3.3% versus 28.4% for buy and hold. Where I struggle with in trading psychology is sitting through drawdowns. So these systems basically eliminate that drawdown. You get 1/6 to 1/7 of the drawdown. And you can see the totals higher quite a bit. So the KISS system here blows buy and hold away as far as total gains and of obviously drawdowns. You can see last year, 2022, the KISS system would have made about 7.5%. Remember, it's long only, so it's only catching one side of the market versus the Qs lost 33% last year with a 63.9% pullback from the highs. Okay, here's SPY 78-minute versus buy and hold. Again, quite a bit higher than buy and hold, the total gains. So far for this year, the gains are just slightly above buy and hold, but obviously a lot less drawdown, only 1.9% versus 11% from buy and hold. Last year made about over 7% versus the Qs, the S&P, which lost over 18%. You can see the years here. Again, not every year is higher. 2021, about 22.5% versus 30.9% on buy and hold. But then, you have 2020, which KISS system made 45% with 7 trades, 3.7% drawdown. And buy and hold made 18% with a 35% drawdown. So you could see the made benefits. Let's look at some others. Image number 3, here's XLE and OAH 78-minute. I like the 78-minute. It's able to be a little more dynamic, and you're still not getting a ton of trades here. I mean, look at this. 4 to 5 trades a year. I mean, that's very doable. So you can see this versus buy and holds, not even close. And especially for oil services, look at some of these drawdowns. 76%. That's hard to sit through, guys. Something like that. And 2020, 76% drawdown OAH had. It lost 41% that year. The KISS system made 83.6%. So contrast that with losing 41%. 120% difference, All right. 10% drawdown versus 76. Over sevenfold difference. Oh, at the bottom of these tables, I also have the average hold times, so that gives you an idea. 44 days for the XLE average, 60 days for winners, 20 days for losers. For OAH, 25 days for overall, 31 for winners, 6 for losers. And you can look at the previous one above for the Qs and SPY for the average hold times. Chart number 4, here's some commodities. PDBC, I like that one because it doesn't have that K1. And you can see the gains here. Average gain 23% versus 9%. So more than double buy and hold. Look at the drawdowns, 2.2% on average, 3% maximum. Think about that, guys. 3% only drawdown. Buy and hold, 34.5. Average 18. Not even close. And here's uranium ETF, also extremely well. Average gain, 70% since 2020. Finally, image number 5, here's some other ones. Here's IEU, that's gold. I could have used GLD, I just used this ETF. Again, look at buy and hold versus gold. Almost 18% on average gain a year versus 9% buy and hold. A little more trades on this one, 13 on average. But only a couple losing years, very small, versus buy and hold gold. You have quite a bit of losing years. Of course, your drawdowns. And here's GDX. GDX, quite a bit more trades on this puppy. GDX is very volatile, as I discussed. But I mean, look at the difference on buy and hold versus this. 28% gains. It's up 32% this year. The GDX KISS system versus buy and hold would be about, just over 2%. And, again, average 6% gains versus 28%. Drawdowns, I mean, look at the drawdowns are huge. Very small on the KISS systems. So there you go, guys. And I have some other ones. My plan is to launch a basket of these, put them on the STS tables. It's going to be a premium function on the website, so it's going to be an additional membership. Again, you guys should be fine with that, because if these systems perform even half of what they show, they're worth their weight in gold, I think. And the way it's going to work, again, what I'm planning to do is provide free SMS text messaging for these and emails. So if you sign up for these custom KISS high performance systems, you will automatically receive a text message and email notification whenever they enter a trade, whenever there's a new smart trailing stop, whenever they exit, etc. So I'm looking forward to that, and I hope you are too. Let's go ahead and move back to the rest of the market newsletter here. So item number 6 shows the index sector table, what transpired last week on Friday. Again, hell of a rally the last 3 weeks. Once again, big gains led by the Russell. Remember, the Russell was the most oversold. Remember, I said this a couple weeks ago. I said if I needed to go long one of the indexes, I would go long the Russell because it has the most catch up to do, and that's what it's been doing. Market sectors, out of the 21 sectors, only one was slightly down. That's oil services. Everything up very strongly. Looks like the biggest gainer was banks, up 6.9%, not surprising. Currencies, US dollar down 1.8% last week, so good pullback. That helped the market. Cryptocurrencies, remember, they got overbought. I've been talking about that, so they pulled back for the week. Commodities, mostly to the downside. For the energy, crude oil down 1.4%. Commodities down 0.3%. And some strength in copper. Copper was very strong, up 4% last week. That's notable. Some of the ags were slightly up. Precious metals were up for the week. As you can see, gold, silver rallied the most, up almost 7%. GDX, the miners, were up more than gold. I'm going to give you, I have a pretty good idea of what I'm looking for on this area. I'll discuss it below. And again, as far as the 10-year, that appears to put in put in a decent high about 3 weeks ago. Down nicely last week. Bonds were up. Next. Item number 7 shows the economic news calendar. With this shortened week, not a lot of things on the docket. FOMC minutes on Wednesday, obviously, so that's a notable. But again, guys, holiday week, I'm sure a lot of you will be checked out or won't be messing with the market all week. It's the time to do that for the holidays. All right, let's go and look at the index charts. So, first chart below, item number 8 is the monthly chart of the major indexes, the Dow and S&P and Nasdaq and Russell. And again, strong up month. You could see very strong candles. The Dow held its uptrend line here. Again, typical seasonality played out. We had weakness in August, September, and most of October. And so far, November's been up nicely. You can see that. The Russell here at the bottom, you can see it rallied off that long-term support. Next, chart number 9, here's the weekly view. You can see how we busted out of these kind of channel flag patterns on the NASDAQ and S&P a couple weeks ago. Nice follow through. Nice rally off the lows on small caps. Next, chart number 10, here's the daily view. Again, remember 3 weeks ago when we were extremely oversold, bearish sentiment, etc., we were below the lower Bollinger Bands, and then things just took off. Pretty much a V rally since then. Basically only 1 day, 1 or 2 days down the whole time. 1 day only for the S&P. Next, moving on to the S&P 500 chart, chart number 11. Here's the monthly view of the S&P. Really not a lot to say. We're still in this long uptrend channel from the 2009 lows. Never broke that. Next, chart number 12. Here's the weekly view. So a lot of things on this chart. First off, that last low in late October held that 61.8 fib just perfectly. Nice, good 3 week rally up since. Next, chart number 13, here's a daily view. This shows this leading diagonal that we've been talking about it, this 5 waves. Again, why is it a leading diagonal instead of like a traditional 5 waves? Because you have an overlap of wave 4 overlapping the low of wave 1. Remember, in your standard technical analysis, your standard wave counts, your impulse 5 waves, wave 4, which is this, cannot overlap the wave 1. And that's what happens here. Overlaps the low of wave 1. So again, that's standard technical analysis, Elliott wave. But anyway, we've hell of a rally since. We're now open to a supply zone. We are overbought. I don't really see any divergence here, even on the RSI. We're into the holiday week. Again, doesn't mean every day is going to be up this week. But I think soon we'll pull back here, especially maybe into the early part of December. There's also the latest open gap is right here, which could be a magnet on that pullback down to that 44.20 area. Next, chart number 14, another daily view, just zoomed out a bit. Again, you can see how we're just up around this area. Next, chart number 15, here's the S&P equal weighted index, just showing you how, guys, when you take out the weighted stocks, the rest of the market's been much weaker. Remember, this year it's all been about 7 to 10 stocks, really. Apple, Meta, Microsoft, you name it. But you can see the equal weighted S&P had a kind of an inverse head and shoulder pattern, higher low. But you can see how much weaker it is. It's so far off the lows versus the S&P. There's a supply zone right up in here as well. Chart number 16, here's the KISS system, one of these high performance. This is the high performance daily version. So it went long, basically 2 bars off the lows, pretty good entry. And right now it's been able to raise its stop 4 times. Current stop is now 43.68. So if we get a pullback soon and we only fill this gap up here, it should still stay in the trade. Chart number 17, here's the 4 time frames. Like I said, 3 weeks ago, we were extremely oversold. Look at the wide moving average ribbon. That's why I like these moving average ribbons, guys. Whenever they pinch, it tells you something. And when they get too wide, you start looking for a reversal. You had the wide ribbon, you had the DeMark 9, you had the support cycle. Everything was lined up. You had the bearish sentiment, you had economic data. So anyway, hell of a rally since. Then we blew through a resistance cycle. The ATR is supported on all these time frames now at this point. Next, chart number 18, here's the half-day chart. Again, basically shows you the same as the daily S&P I showed. We're into the supply zone. There's also a little area here. So we'll see if we soon pull back from this area, and you can see that gap below. Next, chart number 19, here's a 60-minute view. So, and this is an example, guys. This last high at 45.20, you had a MACD divergence there, but it didn't produce much of a pullback, did it? So now if you make another high here, you could set up a second divergence. Chart number 20, here's another 60-minute chart. Just shows you all these gaps, right? 1, 2, 3, 4, 5. I know there's another one in here too. I know there's 6 gaps, but crazy to see all these gaps that we've had. By the way, this area is also a big support. This kind of a support zone now. Again, your first support target would be maybe filling this gap here. Next, chart number 21, 15-minute view. Not much to say there. Let's move on. Chart number 22, here's the weekly view of the triple Qs. Again, hell of a rally. This is a chart I showed, a few months ago. This would be the bullish view, wave 3, 4, and it's going up in this 5 of 3. So far, appears to be playing out. You can see how the moving average rim had pinched on that consolidation that we had for over 2.5 months. Chart number 23, here's the triple Qs. They briefly, intraday, made a new all-time high there. Hell of a move. Again, what can I say? The epitome of strength. It's because of the, this is strongly weighted by just a few stocks. Let's take a look at that. So image number 24, this is from barchart.com. This just shows you the 8 top weightings of the triple Qs. So take a look at these weightings, right? So these weightings, let's see if I included these weightings, just these 8 stocks are 45% of the Qs. Think about it, 8 stocks. If you took these out, what do you think the Qs would look like? So this is where most of the majority of the gains have come, and this also skews the S&P. What doesn't have this is the Russell. That's why the Russell's been so weak, guys. The market needs broader participation than just 7 to 8 stocks. Chart number 25, here's the half-day chart. Again, similar look to the daily. Again, we are a little overbought here, obviously. Next. Chart number 26, here's the KISS system. Again, you can see how well this is done. Went back long nicely. 4 smart trailing stops now. Nice to see it just ratchet higher. Chart number 27, here's the 4 time frames. Again, really the same look as the S&P. We had that DeMark 9 at the low, wide ribbon. Now, I will say a lot of the tech stocks have DeMark 13s on the daily. Okay, doesn't mean we stop there, but a DeMark 13, you don't see those that often. So be aware of that. So, just short term, that has my attention. Otherwise, ATR is supported on all these time frames. Moving on to the Russell, here's the monthly view. Russell's up 8.4% for the month. Again, you can see it basically has been holding this long-term support. It tested it in 2022 multiple times, and then recently, so far we've held it. Chart number 29, here's the weekly view. Again, you can see how we rallied off that support. There's a little supply zone up in here. Again, the Russell, guys, doesn't have those, 8 to 10 big cap stocks. That's why it's been so weak. But anyway, this inverse head and shoulder pattern I showed a couple weeks ago, has obviously been playing out. Give a nice trade, that higher low. Chart number 31, here's the 60-minute chart. Your opportunity really was buying that dip into this gap. What I didn't know at the time is if we'd fill that gap, but that was a pretty good area to at least dip your toe in if you missed that initial move. All right, guys, let's move on to some market indicators. Chart number 32, here's the breadth thrust indicator by Martin Zweig. And again, on that first week off the lows, you had a confirmed breadth thrust signal there. Okay, rare to see those. Next, chart number 33, here's the VIX, which has been melting down. But I will say There is this divergence that's starting to form on the 5 RSI. Usually you can get pretty good lows there. And one thing I've been commenting, you see the lower Bollinger Bands? To me, it would be impossible for the VIX, even if the market kept rallying here, to go below those Bollinger Bands because they're pointing down. What we really need to see is soon see a bounce in the VIX. That'll cause this lower Bollinger Bands to start curling up, and then it will be in a position to be able to test it. So maybe we'll see that in early December. Next, chapter 34. Here's the 2-hour view of the VIX. So here's what concerns me. First off, you could see a rising wedge into late October, which played out. But what do you have now? You have a falling wedge forming here with MACD divergence. This looks set up for a bounce. And in fact, this looks set up for a bounce anytime, maybe even this week. So that has me grounded a bit. Next, just following up on some of these other indicators. Remember back at the lows, these McClellan oscillators had this positive divergence. They had higher lows in place versus lower lows in the indexes. Those obviously played out. Chapter 36, here's the BPSPX system. Gave a nice sell signal back in basically early August. And it finally gave a buy signal in early November. It obviously did not catch the bottom. It's not going to, but it confirmed there. Chapter 37, here's another interesting system like indicator, NASDAQ volume McClellan summation with the 2 and 5 EMA. So use these as crossovers. And you could use a confirmation candle to filter out some of these, like this little false sell signal here. But overall, pretty nice signals on this as well. Next. Chapter 38, here's the NASDAQ new highs minus new lows weekly. Again, this has been the problem that has bothered me in the market, but the market hasn't cared. I mean, look, this continues to go make new lows, even though the market's rallied. And that happened, of course, from March to July. Again, what that shows you is 7 to 10 stocks are what caused the majority of the gains in the market. Next. Chapter 39, here's the NASDAQ highs minus lows. You can see that's still negative, which is crazy to me. Again, it's because of those, 7, 8 stocks. And you can see how the NASDAQ's basically back almost to its highs, but this is the new highs is still way lower than that. So you have a divergence there. Next. Chapter 40, here's high yield corporate bonds. So moving to bonds and rates. Remember, they've been strong. Market tends to follow it. Chapter 41, here's a 2-hour view. The positive here is I can count 5 ways, which is more of an impulse. But after 5 ways, you would soon look for a pullback. Chapter 42, here's the S&P versus high yield corporate weekly. Again, the two tend to move together, as you can see. Lockstep with each other. All right. So you always want to keep track of what they're doing. Right. Now, again, the high yield corporate has taken out the highs from August, July. S&P hasn't yet. Chart 43. Here's the 10-year Treasury yield. Again, several weeks ago, a month ago, I pointed out that divergence up here at the highs at 5%. You had MACD divergence, RSI divergence. You had this parabolic move. And it looked toppy to me, and it's had a nice correction, and the market has benefited. Now, there is a support in here. Could try to bounce from little divergence on the RSI. Chart 44, here's TLT 20-year bonds. Remember, they move opposite of rates. Again, this is this monthly chart that I showed a couple months ago where I was postulating that rates, that the bonds have been selling off for 3.5 years since 2020. But I could count 5 clear ways, and this is a traditional 5 ways. 1, 2, 3, 4, because you don't have that overlap. 5. Into a demand zone. I said that was a logical area for bonds to put in a bottom and at least have a counter trend rally. And that's maybe what is unfolding. Chart 45, here's the zoomed out monthly view. Shows you here how I illustrate this. If we have put in a 5th wave low, I'd expect maybe a year-long ABC rally, but a lower high because remember, bonds are now in a secular bear market. But something like that, and then they would go, eventually down again, and rates would go up. So, 5 clear waves here. That appears to be a logical scenario. Chart 46. Here's TLT 20-year bonds daily again. It looks inverse look to the 10-year. Had the parabolic move down, moved up out of it. All right, following up with market sectors. Chart 47. Here's the transports IYT. For a week ago, we showed a tight little coil there. Nice pop out of that, obviously. Chart 48. Union Pacific was a long idea in that area, and Chart 49, FedEx, another couple long ideas we've had in the transports, which obviously played out. Chart 50, jets, the subcomponent of transports. Remember, I was eyeing this all in October. It triggered long finally the first day in November inside that channel, and getting gapped out of the channel, breakaway gap, higher low off the 20-day moving average. Heck of a move, guys. Hope some of you caught that puppy. Chart 51, the banks. This is the weekly view. So you have essentially a double bottom support here into a demand zone where we've rallied off nicely and some MACD diversions. Chart 52, there's the daily. You had a nice tight channel. You almost had that, like I said, essentially a double bottom there. Nice move up. Nearing the 200-day moving average now. Chart 53, financials. Again, heck of a move from that late October low. Almost getting close to the July highs. Chart 54, here's XLK technology. Again, guys, I may stop showing this ETF. Why? Just two names, Microsoft and Apple make up 48% of this puppy. And the same thing you have with XLY ETF. It's Amazon and Tesla, I think. So it's almost pointless when you have an ETF that's basically two stocks, 50% of it. Chart 55, here's XLY. Like I said, Amazon and Tesla make up 42% of this puppy. Otherwise, you can see price stalled at this extended trend line. Chart 56, energy, XLE, still chopping around after that, the correction from the September highs. So far, it's regained its 200-day moving average. Very choppy here at the moment. Chart 57, semiconductors, they've been super strong. This shows you some trigger candles. One of the systems we like to use when you get very oversold RSI readings, you can get a nice tight trigger candle. Here was a short, here was a long. Chart 58, XLI industrials, nice move up from the lows. Chart 59, LAB or XBI biotech. Remember, I pointed out this bullish break in symmetry in late October. The trade setup was here off these dojis, off this high of the doji, right around 67, with a stop right there at the 64.99 low. Nice percentage gain. Chart 60, here's LABU. That's the leveraged ETF. Again, you had the same setup. And here you have another potential setup if we can take this out. Chart 61, consumer staples. They've rallied off the lows as well, but weaker than a lot of the other sectors. Some resistance up in here. And finally, chart 62, emerging markets. Again, they had a symmetry break back here in October. Nice rally. The Chinese market's been doing well. So these areas also are areas to look for pullbacks on for long opportunities. All right, moving on to commodities. Chart 63, DBC. This is the index, down 0.4% for the week. Basically, retesting its 200-day moving or 200-week moving average here. Remember, it tested it back in May, held it, and now it's testing it again. Chart 64, here's the daily. Kind of a diamond, trunk, whatever pattern. It's, again, a lot of just chop city since that breakout back in July. Chart 65, crude oil. Again, guys, this has played out fantastic. We showed a head and shoulder pattern several weeks ago. We were speculating that the sell-off was a wave 3, which There should be a 3 here, and then this is a 4. We expect, and then we had a 5. So 5 of C potentially. That is potentially a low risk area to take a long, perhaps, or just because, right now we have 5 waves down. Next. Chapter 66, there's the weekly view. Again, you have your 200 week moving average down here as well, which has been an important area. The 200 week moving average on a weekly chart is usually a fairly important moving average, guys. This moving average here, and of course you have the extended trend line. Also, your moving average ribbon is pinching. Chapter 67, natural gas down 2.4% for the week. And let me go back to this. Apologize, guys. Okay. So otherwise still in this channel, something to monitor. Chapter 68, copper had a nice week, up 4%. Remember, it held that long-term support. Chapter 69, DBA, still just chopping around here. It looks okay. Chapter 70, uranium ETF, URA. Remember, I've been bullish on this since 2020 when it broke this pattern. You had your first leg of the bull market, a year and a half long consolidation and a coil pattern, and it broke out this year. Again, this is, in my opinion, this is going to make new all-time highs. Chart 71, here's the daily. Again, you can remove this wave B. So you can see this made a new high here now. Moving on to Bitcoin, chart 72, here's Bitcoin. Pulled back last week, bouncing back a little bit here on the weekend. Moving average ribbon didn't get very wide there. It's still pretty wide. Chart 73, here's Mara. I like how this is setting up. You got a nice coil here. I'm long a little bit already, full disclosure. I will add to it if it breaks the trend line here, and I will stop out either below these trend lines or the lower trend line. Chart 74, US dollar has been weak. That's helped the market. 200-day moving average is just below here, though. Moving on to precious metals, chart 75, here's gold. So gold, again, had that typical seasonal weakness from May into the fall. I'm labeling this as an ABC pullback. I think that's a major low. We broke a downtrend line here. You can see how then we rallied up, pulled back, formed a higher low, moving average ribbon, pinched on that. Now, could that be a low? Yes. But another possibility is that that bounces a wave B and it's going to come down again in a C, and then you have your better low. Remember, in uptrends, 3-wave pullbacks are your friends. And right now, really, we only have really 1-2 waves. So this is something to be cognizant of. Chart 76, here's another view. Shows you the same thing. This one also has the GDX-GLD ratio. Remember, the ratio has been underperforming. Stocks have been underperforming the metal since the highs. You want to see that change. Chart 77, here's a weekly view of gold. Again, up 2.4% for the week. Got a nice higher low here. We had a weekly bullish Morningstar pattern. This one has the ratio. You want to keep an eye on that. You can see gold's basically had a triple top resistance up here. I think eventually it'll take that out and then it'll be off to the races. Chart 78, here's the really bullish view where you'd go up in a wave 3, but again, got a long way for this to play out yet. Chart 79, silver, that's the weekly view, up 7%. So silver had a heck of a week, still in this big old coil pattern. Chart 80, there's the monthly view. Again, you can see a larger coil pattern here. Steve has this as a cup and handle. To me, it's just more of a coil, but energy is building. Finally, chart 81, here's silver. Nice rally inside the coil. You can see it had a nice tight trigger there off that long-legged doji. Moving on to the stocks, here's GDX. Again, so far you got a higher low here. It's possible this is an inverse head and shoulder pattern. It's also possible that you could see a little pullback like I show here, and then a rally up. We'll see. Either way, if you're long this, a logical stop would be at that 27 area. Chart 83, here's the 2-hour view. So you can see it's weakening here a bit, but it's going to be interesting to see what this stuff does this week, guys. Chart 84, here's GDXJ, similar look to GDX. So again, for GDX and GDXJ, one view is you got a wave 2 pullback and you're going to go up in a 3, or it's a wave B and a C. Looking at some individual names that we've had on the list, here's Wheaton Precious Metals. This triggered last week, a little pullback on Friday. Chart 86, AEM, another major, kind of an inverse head and shoulder pattern potential. Chart 87, FSM, this is a silver stock. Now this has been pretty good relative strength here, great volume on this move up. Clearly took a nice move. Chart 88, Harmony Gold Mining. Now, boy, this has been basically the strongest gold stock out there. New highs. So much stronger than the others. Chart 89, NG, another one kind of off the lows. And Chart 90, SA. One to watch here if you can take out that area. All right, guys, we're going to follow up with some recent trade setups. So here's AI. I had this as a coil setup a couple weeks ago. It's obviously moved higher. Chart 92, Massey was a long idea from a couple weeks ago out of this horizontal rectangle. It's been moving up steadily. Chart 93, Janex was another one that gave a nice trade off that horizontal rectangle bottom. Chart 94, Vesco triggered early last week over resistance. Doing well. Chart 95, BLDR, another one that it continues to hold up well from its trigger. And Chart 97, LPG. Here's another one we had last week. Nice rally off the coil retest. Chart 98, WKSP was a newer setup last week. Triggered. Still looks okay here, guys. And Chart 99, SBW, WBI, potential short if it loses this trend line. I didn't look for any trade setups this weekend, so I'll be looking at those tonight or tomorrow morning, and I'll post them on the trading community. All right, guys, again, have a good rest of your Sunday evening, and again, have a great Thanksgiving, especially if you celebrate that, or if you're in the rest of the world. Again, I hope you have a good week too. And take care, everyone, and appreciate all the support here. Breakpoint Trades.